Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what big companies are trying to tell us with their official filings. And today we've got some eye-opening news that might just be a sign of things to come for Power Ltd. Stick around. Alright, so what we have here is a Form 6K filing from Power Ltd. Think of this as a company dropping in with some extra news for investors. It is not a regular update like a quarterly report, but more like a special announcement. And in this case, it's all about their financial picture for the first half of 2025. Better late than never, right? The main event in this filing is their unaudited financial results for the 6 months that ended on the 30th of June 2025. Unaudited means it is not yet checked by independent auditors, so take it as a preliminary look. It's like getting a sneak peek at your report card before the official one comes out. And alongside that, they've given us their operating and financial review, which is where they explain what all those numbers mean and what they expect in the future. Now, when we dive into the operating and financial review and prospects, this is where the real story usually is. Companies use this part to explain the good, the bad, and the ugly of their performance. They talk about how they made money, what they spent money on, and what challenges or opportunities they see ahead. It's their chance to paint a picture of their business health and future plans. Power Ltd, as described in this filing, is based in Shanghai. China, they are a foreign private issuer, meaning they are a public company in another country that issues securities here in the US, and they file their reports using US rules, which for them means they refiling under Form 20. F for their annual reports. The report is signed off by Jiali, their chief executive officer. This is the person ultimately responsible for the company's direction and performance. When a CEO signs off on a filing, it means they stand behind the information presented. So, what are the actual financial results telling us? Well, digging into these first 6 months of 2025, we're re-looking for what has changed compared to the same period last year. Did sales go up or down? Are they making more or less profit? Are their costs under control? These are the kinds of questions we want to answer. Now, typically in these reports, they'll give us revenue figures. For the 6 months ended the 30th of June 2025, we would be looking for the total revenue. If revenue has decreased significantly, that could mean they are selling less of their products or services, or perhaps facing tougher competition. Conversely, a healthy increase in revenue usually signals strong demand for what they offer. We also want to see their profit margins. This tells us how much money they keep after paying for all their expenses. A shrinking profit margin can indicate rising costs or pricing pressures. For example, if their gross profit margin dropped from, say, 30 to 25%, that means for every dollar of sales, they are keeping 5 cents less than before. That can compound quickly and really hurt the bottom line. Another critical area is their cash flow. Companies need cash to operate, to invest, and to pay their debts. A company can appear profitable on paper, but still be in trouble if it does not generate enough cash. So we'd examine their operating cash flow, the cash generated from their core business activities. If this is negative or declining, it's a serious red flag. Looking at their expenses, we want to see if there are any unusual jumps. Are they spending a lot more on marketing, research, or administrative costs? Understanding why these costs are rising is key. For instance, a significant increase in selling general and administrative expenses might mean they are trying to grow aggressively, or it could point to inefficiencies and rising overhead. The prospects section is where the company tries to guide investors on what's coming next. They might talk about new products, expansion plans, or even potential economic challenges. It's their forward-looking statement, and how seriously you take it often depends on their track record. For Power Ltd, we'd be looking for any specific growth strategies they're pursuing and how they plan to achieve them. Are they entering new markets, developing new technologies, or forming new partnerships? These details can give us a glimpse of where the company is heading. Now, let's talk about risks. Every company faces risks, and it's important to see how Power Ltd is addressing them. This could include competition, regulatory changes, economic downturns, or even supply chain issues. If they're not acknowledging significant risks or don't seem to have a clear plan to mitigate them, that's something to watch out for. In essence, this filing gives us a snapshot of Power Ltd's financial health and their outlook. It's not just about the numbers themselves, but what those numbers mean for the company's future. We need to see if the company is growing, if it is managing its money wisely, and if it has a credible plan to navigate the challenges ahead. So, to wrap it up for Power Ltd based on this filing, the key is to look beyond just the headline numbers. We want to understand the trends. Is the company on a solid growth trajectory, or are there underlying issues that might be masked by short-term fluctuations? Their financial results for the first half of 2025, combined with their outlook, will tell us whether they are truly powering up for success or facing some turbulence. We'll be keeping a close eye on their future reports to see if these positive trends, if any, continue or if new challenges emerge. Alright, that is our breakdown of Power Ltd's latest filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.